Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate finance. Today we're diving into Bridgeline Digital's latest report, and let's just say they've been busy trying to make things look better than they really are. A classic move. So stick around as we decode what this all means for the company and its shareholders. And hey, if you like diving deep into these reports and getting the real story, make sure you are subscribed. We've also got a killer community over on Discord, link in the description, so come join the conversation. Alright, let's get straight into it with Bridgeline Digital's quarterly report for the period ending the 31st of December 2025. This is essentially their mid-game checkup, showing how they performed in the last 3 months of 2025 compared to the same time in 2024. First off, let's look at the company's financial snapshot, their balance sheet, as of the 31st of December 2025. It shows us what they own and what they owe. Their total assets are around $15.7 million, while their total liabilities are about $6.2 million. This means they have more assets than liabilities, which is generally a good sign. Looking closer at their short-term assets that can be turned into cash quickly, they have about $3.7 million. Now compare this to their short-term debts, which total around $5.2 million. This means Bridgeline Digital has more short-term debts than short-term assets. This is a red flag, indicating they might struggle to pay off their immediate bills if things go south. And what about the owner's stake? Their total stockholders' equity stands at about $9.6 million. This figure represents the residual interest in the assets of the company after deducting liabilities. It's the book value of the company belonging to the shareholders. Now, let's talk about their performance, the income statement. For the last 3 months of 2025, Bridgeline Digital brought in about $3.9 million in revenue. That's a small increase from the $3.8 million in revenue they had in the same period in 2024. But here is the kicker. Despite that slight revenue bump, they actually lost money. For the 3 months ending the 31st of December 2025, they reported a net loss of about $86,000. That's a significant improvement from the $634,000 loss they had in the same period in 2024. So they are losing less money, which is good, but they are still losing money. This translates to a net loss per S-share of about $0.01 for the latest quarter, compared to $0.06 in the prior year. So the loss per S-share has shrunk. Moving on, we see their comprehensive loss. This includes their net loss along with other items that affect equity, but are not part of the income statement, like currency translations. For the 3 months ending the 31st of December 2025, their total comprehensive loss was about $92,000. This is also an improvement from the $563,000 comprehensive loss in 2024. This statement shows how the equity section of the balance sheet has changed. During the quarter ending the 31st of December 2025, they saw some increases in additional paid-in capital, which generally comes from issuing stock. This is likely due to stock options being exercised and stock-based compensation, adding about $78,000. Now let's look at the cash flow statement, the lifeblood of any company. This shows where the cash came from and where it went. For the 3 months ending the 31st of December 2025, Bridgeline Digital used about $39,000 in cash for operations. This is a reversal from the same period in 2024, when they actually had a cash inflow of $178,000 from operations. That is a big swing, and not necessarily in a good way. In terms of investing activities, they spent about $17,000 in 2025, mostly on purchasing property and equipment and capitalizing software development. This is a slight increase from the $5,000 they spent in 2024. For financing activities, they used about $100,000 in cash in both periods. This is mainly due to payments on their long-term debt. Let's dig into the notes for more details. Under accounts receivable, they have about $1.6 million in receivables after accounting for potential bad debts. They also note that one customer represented over 10% of their receivables at the end of 2025, which can be a risk if that customer doesn't pay. Here is an interesting line item: warrant liabilities. These are essentially financial instruments that give someone the right to buy stock at a certain price. The value of these liabilities can change, affecting the company's profit or loss. For the 3 months ending the 31st of December 2025, Bridgeline Digital recognized a gain of about $90,000 from changes in the fair value of these warrant liabilities. This is a positive change compared to the $114,000 loss they saw in the same period in 2024. This gain helped improve their bottom line for the quarter. They also have intangible assets like domain names and customer relationships, totaling about $3 million after accounting for amortization. Looking at how they compensate their employees, they incurred about $78,000 in stock-based compensation expense in the quarter ending the 31st of December 2025. This is down from $107,000 in the prior year. This is a common way for tech companies to reward their teams, but it does dilute existing shareholder value over time. A significant event noted here is the redemption of their Series C convertible preferred stock in March 2025. They bought back these shares from certain sellers, which resulted in a reduction in their additional paid-in capital. This means they bought back stock that was once treated differently than common stock. They've also approved a new stock incentive plan for 2025, which allows them to issue up to 1.5 million shares of common stock. This is a key part of their strategy to attract and retain talent. By the end of 2025, they had about 200,000 options and 169,000 restricted stock units outstanding under this plan. It is important to understand that while the company is showing some positive trends like reduced losses and increased revenue, the bottom line, the net loss, is still a reality. The diluted net loss per S-share was $0.01 for the 3 months ended the 31st of December 2025. This means for every share of common stock, there was a small loss associated with it. Breaking down their revenue, subscription revenue makes up the bulk of it, about 81% in the last quarter. This is a stable and recurring revenue stream, which is generally preferred by investors. Services revenue accounts for the remaining 19%. The total revenue increased slightly, driven by subscription revenue. Bridgeline also reports something called adjusted EBITDA, which is a non-GAAP measure used to show operating performance before certain expenses like interest, taxes, depreciation, and stock-based compensation. For the 3 months ending the 31st of December 2025, their adjusted EBITDA was positive at about $122,000. A nice comeback from the negative $193,000 adjusted EBITDA in the same period in 2024. This suggests that their core business operations are becoming more profitable, even if the company as a whole is still reporting a net loss. Their sales and marketing expenses remained relatively flat at about $1 million for both periods, making up around 27% of their revenue. This indicates they are investing consistently in growing their customer base. Research and development expenses, however, saw a notable drop from $1.1 million in 2024 to $0.8 million in 2025. This could mean they are cutting back on innovation, or perhaps they have completed major development cycles. As a percentage of revenue, R&D fell from 28% to 20%. Looking at their liquidity, Bridgeline Digital states they may offer up to $50 million in debt or equity securities. As of the 31st of December 2025, they had about $47.7 million available for issuance under their shelf registration statement. This gives them some financial flexibility. They also reported a small increase in restructuring and acquisition-related expenses, from $10,000 in 2024 to $25,000 in 2025. This suggests they are actively managing their business structure and perhaps exploring growth through acquisitions, though the amounts are quite small. In their critical accounting policies, they emphasize revenue recognition, goodwill, and intangible assets, and stock-based compensation. These are areas that typically involve significant estimates and judgments by management. For example, their estimate of bad debt for accounts receivable relies on historical data and current market conditions. On the legal front, Bridgeline Digital states they are not involved in any material legal proceedings that would significantly impact their financial health, which is always good to hear. So, what is the verdict on Bridgeline Digital? On the positive side, their revenue is growing, albeit slowly, and their net losses are shrinking. The increase in their adjusted EBITDA is a good sign that their core operations are becoming healthier. They also have access to capital, which can be crucial for future growth. The reduction in research and development spending might be a concern for long-term innovation, but it could also mean they are focusing resources more efficiently. The increase in current liabilities over current assets is a point of caution, suggesting they need to closely manage their short-term cash flow. The company's direction seems to be focused on strengthening its subscription-based revenue model, which is a solid strategy in the SaaS world. However, the reliance on warrants and stock based compensation means dilution for existing shareholders is a constant factor. The slight increase in debt payments also means they need to keep a close eye on their debt load. Overall, Bridgeline Digital appears to be in a turnaround phase, making progress but still facing challenges. They need to continue to grow revenue, ideally with profitable growth, and manage their expenses carefully to reach consistent profitability. For investors, it is a situation that requires close monitoring of their cash flow and continued revenue growth, especially in their core product offerings. Alright, that is our breakdown of Bridgeline Digital's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.